Hey there, finance students! Today, I'm unlocking the secrets of financial statements. By the end of this video, you'll be able to read, understand, and analyze financial statements like a pro. So, let's dive in. First up, the basics. A financial statement is a formal record of a company's financial activities. It includes three core components: the income statement, the balance sheet, and the cash flow statement. Each one tells a different part of the financial story. The income statement, also known as the profit and loss statement, shows the company's revenues and expenses over a specific period. It's where you'll find the net profit or loss. In simple terms, it's a snapshot of how much money the company is making or losing. Now let's talk about the cash flow statement. This statement shows how cash moves in and out of the business. It's divided into three sections: operating activities, investing activities, and financing activities. Here's the interesting part. The cash flow statement is derived from the profit shown on the income statement. Imagine you're a detective. You start with the net income from the income statement. Then you adjust for non-cash transactions like depreciation and changes in working capital. Voila! You've got your cash flow from operating activities. Let's look at an example. Say Company A shows a net income of $100,000 on its income statement, but on its cash flow statement, the net cash from operating activities is $120,000. Why the difference? Because adjustments like depreciation added back non-cash expenses, boosting the cash flow. The balance sheet, on the other hand, is a snapshot of a company's financial position at a specific point in time. It shows assets, liabilities, and shareholders' equity. Think of it as the what we own and what we owe statement. So how do these all link together? The income statement feeds into the cash flow statement through net income. The cash flow statement, in turn, affects the balance sheet by showing changes in cash and cash equivalents. It's a beautiful, interconnected system. Why is analyzing these statements important? Because they give you a 360-degree view of the company's financial health. By examining the income statement, you know how profitable the company is. The cash flow statement tells you how well the company manages its cash, and the balance sheet reveals the company's financial stability. When you put all these pieces together, you can make informed decisions, whether you're investing, lending, or managing a business. You can spot red flags like declining profits, poor cash management, or excessive debt. You can also identify opportunities for growth and improvement. So there you have it. The secret to reading and analyzing financial statements is understanding how they interconnect. A company can be profitable and still experience liquidity issues. Here's why. Profitability versus cash flow. Profitability refers to the difference between revenue and expenses over a period, while liquidity refers to the company's ability to meet short-term obligations with available cash. A company can show a profit on paper but have poor cash flow. Delayed payments. Even if a company makes sales and earns revenue, if customers delay payments, accounts receivable, the company might not have enough cash on hand to cover immediate expenses like salaries, rent, or suppliers. High inventory levels. Companies may invest in large amounts of inventory, which ties up cash. Even though they are profitable from sales, the cash isn't available until the inventory is sold. Debt repayments. A profitable company could have significant debt obligations, which require cash payments. Without sufficient cash flow, paying off these debts can become difficult. In short, while profitability reflects long-term financial health, liquidity is about having enough cash on hand to meet immediate needs. The two don't always align, leading to liquidity issues despite profitability. Keep practicing, and soon you'll be reading these statements with confidence and precision. Thanks for watching, and happy analyzing.